Home prices are on the rise. The S&P Case-Shiller Home Price Index rose 5% over the past year as of February, compared to 4.6% in January. The index also posted its largest monthly increase since July of last year. And here with more analysis is David Blitzer, chairman of the index committee at S&P Dow Jones Indices. All right, David, so why are we seeing home prices inching higher?
I think we've seen a lot of people come back into the market on the buying side. We've seen some improved confidence. Clearly, we're still benefiting from very low mortgage rates for those people who can easily qualify for a mortgage. And across the entire existing home market, and certainly among some of the middle and higher priced ends, we're seeing fantastic strength in prices. We're not seeing a whole lot of supply. The month supply numbers have remained pretty steady, around 5 to 6 months, which is certainly not an overwhelmingly large figure by any means.
All right, and is this a trend you expect to continue? I mean, what's the bottom line for housing in 2015?
I think the bottom line for housing is prices will be up for the full year. I'm not convinced they're going to be up 5%, but we're certainly talking at least 3 or 4, and it could do better than 5%. I think the existing home market will remain strong. There are a couple of shifts going on in the background, though. One is that the construction of new houses continues to be very weak, and it's especially weak for single-family homes. The construction of apartment buildings is actually quite strong. It's as strong as it's been in several years. It's just we're not building very many single-family homes. So there may be a big shift below the surface of where people want to live or where they can afford to live or whether they want to rent instead of buy.
All right, what about the Fed's looming policy shift? We have the April meeting tomorrow. I mean, how should investors factor this in when it comes to housing?
Well, if they do anything other than put out a sort of non-event comment after tomorrow's meeting, I think there'll be massive shock in the world. I can't find anybody who thinks they're going to do anything tomorrow. And in fact, the people who think they'll do something in June is a shrinking population. When the Fed does raise interest rates, it'll clearly roil the markets for 2 or 3 days. It'll probably spook a few home buyers. But the big question to me is not the first increase, it's how soon until the next increase. If the next increase comes, the following meeting, it's going to look like they panicked on inflation and there'll be a huge amount of fear and upset. If the next increase doesn't come until 2, 3, 4 meetings later, everybody will be relaxed and it won't have much impact on the economy.
All right, now real estate is local, so just real quick, give us a sense of which cities showed the most growth.
Denver had prices up 10% over the last 12 months, which is a pretty rich or torrid pace. San Francisco is right behind them at 9.8%. Generally speaking, the West and plus Florida are looking very strong. And these were some of the boom spots, 8, 10 years back. The upper Midwest, Cleveland, Detroit, Chicago, that's not too good. Cleveland, I think, was down slightly on the month. Chicago was flat. The Northeast sort of drops in between those two areas.
All right, David Blitzer, chairman of the index committee at S&P Dow Jones Indices. David, thank you.
Thank you.
I'm Scott Gamm, and you're watching The Street.